Williams Company's stock, ticker symbol WMB. This stock is up 18.4% year to date, outperforming the S&P 500, which is up nearly 15%. And WMB stock reported a earnings on the 6th of May, where they beat on EPS and revenue. However, for the upcoming earnings, analysts expect they will miss. People love WMB stock for different reasons, and one of them is the dividend. And I understand why, with dividend yield at 4.5% and a decent growth track record. If we take a look at the total returns in the past 5 years, we see that WMB stock outperformed the S&P 500, and this is including dividends. Very impressive. So could this be the perfect time to buy WMB stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does WMB do? Williams Companies is a midstream energy company that owns and operates the large Transco and Northwest pipeline systems and associated natural gas gathering, processing and storage assets. Diving into the earnings, we see that adjusted EBITDA increased 8% year over year. So we're off to a great start already here. EPS increased 5%, which is also very nice. And the dividend coverage ratio based on the AFFO also looks pretty rock solid at 2.6 times. Debt to EBITDA is reported at 3.79, also looking pretty good to me. The future guidance also looks pretty interesting, with adjusted EBITDA expectations at 7.4 billion in 2025. EPS at 1.97, which is a decent increase from 2024. AFFO per share also looks pretty good at 4.25, and the other numbers also look pretty good. WMB has B credit ratings, which is not bad, but I prefer A credit ratings here. That's something to keep your eye on. It is expected that the electricity demand will increase at a high pace in the coming years with data centers and AI-driven futures. I think this could be a very interesting opportunity for companies like WMB. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. WMB stock is a 51 billion market cap company. PE ratio is at 18, indicating they could be undervalued right now. Later in this video, I will show you my 3 price targets for WMB stock, so make sure to watch until the end. And in the meantime, please let me know your thoughts on WMB stock. Revenue is at 10 billion, and in this graph we see that revenue went up and down quite a lot. And this is also very common for a company in this industry. However, I always prefer a bit more steady pattern here. Margins are going up in the long run, and this is really important to me. With revenue being a roller coaster, you want the margins to increase at a decent pace. EPS is looking pretty good in the long run. It is going up, although it is not always steady and consistent, except for the recent years. Analysis expected EPS will start increasing from 2025 on, at a decent 10% to 11% average per year. In 2024, it is expected to decrease a little bit. For the revenue, analysis expect 13 billion in 2028, resulting in a 7% average growth per year from 2025 on. Return on assets is sitting at 5.6%, which is a decent number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at 7%, which is also a decent number. It is also higher versus the 5-year average, which is a good thing. Current ratio is at 0.52, which is a great number. Nothing really special to mention here, to be honest. And right now WMB has 27 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. WMB has 667 million in total cash, so they can't pay down a big chunk of their debt. This is something that I don't like. And to be honest, this could be a potential red flag to me, since it is really out of balance. So, it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends, and all other things. And here we see that free cash flow is going up in the long run. However, it is not really steady and consistent, but in general it looks good to me. Shares outstanding are increasing, which is something that I don't like. However, companies like WMB increase shares to raise capital. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 4.5%, which is an insane number. Annual payout is at $1.9 and payout ratio is at 97%. However, earlier in the video we saw that dividends are covered 2.6 times based on the AFFO, so this 97% is a bit diluting. The 5-year growth rate is at 5%, which is a decent number. On top of that, they have increased the dividends for 6 years in a row, which is very nice. And if you take a look at these numbers, the dividends paid since 2014, you see that WMB did increase the dividends at a slow pace. However, in the long run, this really adds up. In this graph, we see the expected dividends in 2024, 2025, and 2026. Of course, this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at a similar rate versus previous numbers. And overall, these dividends look really good to me. But how about the historical returns? I decided to compare WMB stock with the overall market. In this case, the S&P 500. Next to that, I added ET and ENB. On the 5-year chart, we see that WMB easily beats the S&P 500, with a total return of 120% including dividends. Both ET and ENB underperformed the S&P 500. On the 1-year chart, things look pretty similar, with again WMB having one of the highest returns. This time, ET has a slightly higher return. ENB is still at the bottom of this list. On the 6-month chart, it is again WMB that is having the highest return, so there is a pattern that starts to develop here. On the 1-month chart, however, it is WMB that is having the lowest return. Bottom line, WMB was by far the better investment over the past 5 years, but most recently it is lagging behind a little bit. So could this be the perfect time to buy WMB stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth, I'm filling in 4, 6 and 8%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin, I'm putting in 25, 27 and 29. For the free cash flow margin, I'm putting in slightly higher numbers. For the PE ratio, I'm putting in 15, 16 and 17. For the price to free cash flow, I'm putting in the same numbers. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now, WMB stock is around $42. I hit analyze, and we see a lot of red numbers. We have a low price target of $28 to $30. We have a mid price target of $36 to $39, and we have a high price target of $46 to $50. To me, the mid to high price target is the most justified here, meaning the stock could be undervalued according to these numbers, but they are kinda in the middle of this range. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on WMB stock is that it is an interesting company. With a bright future ahead, this could be an interesting moment to load up some shares. The fact that revenue is increasing again and some tailwind ahead comforts me a lot. On top of that, margins are increasing again, which is a good thing. From a dividend point of view, things also look pretty decent with a high yield and decent growth stats. From a value point of view, things don't look that bad either. I don't think they are massively undervalued, but there might be some value here. For now, I'm adding WMB stock to my watchlist and keep analyzing them from time to time. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.